Okay, Sunday, December 11, 2016. I'm now going to look at the wheat market. Wheat was one of those that I've been watching to see about finding a bottom on it. Basically, at the beginning of the year, if you look at the unbalanced volume here, we'll take gold, for example. This was basically, gold was the one that basically kind of turned me that we were going to head up this year. And commodities, you can see that the unbalanced volume came down to a washout area. I look at the weekly because it usually shows a persistent trend. Gold has been coming down for multiple years. And then we had a turn. My target was, the line here at 1400 came within an X amount. And now we're working on the downside for right now. Okay. For those of you that email me about your gold situation underwater, I try to do the best I can to dig you out of the hole that you're in, but also every once in a while, you may dig your way out of a loser. I don't want to call it luck. The good luck thing is I really don't go for that. This is you're putting some time and effort into it. I mean, in theory, it's a coin flip. You're the right or wrong, right? And it all comes down to how much you want to lose and how much you want to make, really. So, but getting back to the wheat here, okay. So wheat, okay. So wheat was one of those that didn't turn this year, and it's basically been coming down for a while. Wheat is one of those. Let's see here. I think rice is consumed by 3/4 of the planet every day. I think it's rice, corn, wheat, and then bananas. Okay, commodity-wise, number one traded commodity is coffee, and the most used commodity after water is concrete. Cement, concrete, same stuff. You know what I'm talking about. Okay, so here we have wheat. Wheat is really hardy. You can drop it. You can drop the seed out of an airplane and it'll grow. It doesn't have as much of a cycle type deal as, say, soybeans or corn, where it's really susceptible to drought, okay, situations. Basically, from the 2000s, we were in a secular bull market in commodities. We rolled out of the .com. You had a pile of money. What do? You're sitting there looking at $350 silver. You go, hey, it's cheap. Let's go into it. Okay. So we had the run in wheat and the pullback, this, and then we're working on lower lows. We basically broke out of this. So Kevin was basically going back to, gosh, if I could get it, under $4 a bushel. I'm looking basically for a long period of sideways, okay, because my risk is less. It's quiet. Nobody's, how about this one? Can you sit on your hands for 4 years, and then the market say for wheat with grains, it's just like the E-mini. Every dollar or 100 points is $5,000. Okay, so it's if you like playing the ES, you can play corn, wheat, beans. I usually point people into corn. Okay, it doesn't move as much, maybe 4 cents plus or minus every day, that kind of thing. Wheat can move more, and beans are just. Before we had the S&P futures, when it was at $500 a point, when I was a broker, under Bush Senior, that was the Rolls Royce soybeans. But wheat is one of those two that give us a daily bread kind of thing. So as you look at wheat here in a monthly, you can see that the unbalanced volume is basically oversold. We are trading under this. Okay, so it would be. This is the main trend is basically down. Okay, so how I work my way out. So I have a monthly. It's basically saying, hey, it's been oversold for a long time. Captain Obvious. Okay, so then you have where wheat comes down. It has some nice moves in here. Basically, the sideways pattern breaks down again, and then we have sideways for basically since the summer, okay, and there are multiple kinds of wheat. There are like bread wheat, cracker wheat. There's spring wheat that are planted in the spring, and winter wheat like Kansas City and Chicago that are planted in the fall and harvested in the spring. Okay, and you can't use one wheat for another wheat. They're different glutens, blah blah blah, yada yada yada. I won't go into that. Okay, because on my thing, I just look at the chart. Basically, it's the trend is down, but okay, here's where we get the but part. So I'm looking at wheat. You know, it comes down sideways, pokes up, and falls back through. Okay, so. But on weekly here, it is oversold on the unbalanced volume. So basically what it is it's not that it is going to turn, it's susceptible to a turn. We had a hard bottom out process on here, down here at about $4. And I was using $4. I wanted to get it under 4. Okay. So we have our sideways been going on through harvest of the spring wheat. So September, October, November, December, and that kind of thing, sideways pattern. Dollar's moving higher, so it is affecting wheat just like it's been affecting gold. Okay, they are logically moving. Some things aren't logically moving, but I try not to parlay too much stuff on it. Like if the dollar goes up, stocks should go down, that kind of thing. Each market is on its own. As you can see here, there are no talking heads. There are no, you know, that type of thing. It's basically, I look at it this way. You have a sideways pattern on wheat. Okay, what we know is when you have a period of sideways, a breakout and a trend develops. Okay, sometimes the sideways, they break out and it comes back through. Try it again, that's weak when it comes back in. Okay, so here is, we would need to basically clear, we'll use this, we'll say 425, okay, and these lines here for December, it's above pivot. Friday, somebody emailed me and asked me about wheat, and I said, well, it's still corrective in nature because it was kind of a symmetrical triangle here, okay. That's usually a continuation pattern, and lo and behold, you had the world famous late day short covering rally, and it poked through, it made a new high for the week, and it closed down. I also included the cloud on here. I just throw this on. It's just an eyeball thing. And my gobbledygook up here, what it is I have unbalanced volume, which for this charting package I fell in love with. What do we have? RSI, relative strength. That tells you approximately how much you can get out of it in a day. Money flow, to see if the money's pushing it. Average trading range. I'm basically looking for extremes. I'm looking for when all of these are piled in, and usually there's 2 or 3 signals on here when all the indicators are jammed one way or another, and it's just a quick eyeball, 1.3 seconds, I'm done. You know, I just move to the next chart, move to the next chart. ADX is an underused indicator, and what that is that tells you if you're in a trend. Some people use MACD as a longer hold, stochastics, but an ADX here, this baby blue line, it tells you if you're in a trend. Okay, I also used Heiken-Ashi bars. Holy buckets for all of you taking notes. Heiken-Ashi, okay, instead of say like candlesticks. Okay, Heiken-Ashi also uses a moving average in here, so it doesn't get as whippy as if you had regular candlesticks. Okay, and I like that. I fall victim to the same thing too. I put my mechanical stops in, you get whacked, and then you're upset. You know, the best part, the thing what you want to do is if you have something, you want to stick with it. You don't want to be flopping around all over the place, because all you're doing is making the broker richer. The human mind can only handle about 6 tickers. Okay, it gets to be overwhelming. Find one market like the S&Ps or the NASDAQ or the Russell or soybeans or corn or bonds. You can say like Apple or whatever. Find one thing and then follow it religiously, and then that's the key to all of this. Like I said before, the best hedge fund manager, Ray Dalio, over 40 years, he does about 3% a month. I know for the young ones out there, 3% a month is a shock, but compound interest works the same thing. You can earn. Remember, this is a business. Earn 3% a month. Punch it in after 10 years. You know, it's kind of like with the Forex side. You know, if 3% a month on the Forex side, that begins to add up. Okay, so the deal is it's tough. You know, if I said, well, stocks do between, depending upon where you're at, 6 to 10% a year with dividends, that kind of thing. That's it. That's all the market gives you. That's all you can do. The best, you know, the only way you can get around that is leverage or writing options. And I'm a big believer in that. You know, if you want to get out of something, write a call option against it. Or if something's cratering, you can write a put option, naked put to get long. Okay, well, that's here nor there. So we'll get back to wheat. Good going, Kev. You're not following your script. All right, so we're at wheat. Okay, we're now down to a daily. I have a sideways pattern. So what do I know? That there's going to be a trend that breaks out here. Okay, so it's either going to trend higher or trend lower. Okay, we have an oversold situation. We closed above the daily pivot, and it basically double bottomed down here. Okay, and the key for here is not as much. I try not to use the wicks. I use the bodies, and that most people, you know, if you have to clear, you know, 425, you know, you're in before somebody says, well, I'm not going to buy until it gets to 428. Okay, so that gives you 3 cents or $150. Okay, you're in a little bit early. All right, so wheat, mechanical, sideways. If you do buy wheat, there's also mini contracts that are 1,000 bushels. So it's $10 a point. That'll get your feet wet. I think it's XW, I believe, is the symbol. It's a good way to start. It's a good way to add to winners. That's the thing that people don't do. They get a winner and they leg out. You know, they sell a third, they sell a third, they sell a third. It pulls back a third or halfway, and then it takes off again. The key to all of this is adding to winners. Unfortunately, some people make an inverted pyramid. If it breaks out above here, you'd buy again and you put your stops down below it. Okay, so it's just mechanical. Okay, so we have a sideways situation in wheat. Here's the daily. Now I go back to my commitment of traders report. Where am I at? Wheat. Okay. So here you see that the trend is down. This is 2012, right? 13, 12, and 13, 13, 13. 1 year, 2 years, 3 years, 4 years, 5 years, 6 years here. And you can see that I don't have it on here, but the rate of change, things are beginning to quiet down, okay? And you can see that this is on a weekly. You know, it's kind of holding its own right here at $4 a round number. Then you get back to commitment at traders reports, right? Usually you go along with the large traders early. Here you see them that they were net short, and then they crossed over and went long, and you got this run up. And then it came back against them, and then they got short again. And I think they basically stayed short the majority of the time, a couple of times in here. Seasonal, right? Harvest for winter wheat is in July. So in the middle of these, the Minneapolis wheat is in the fall. Okay, Kansas. So it's here. Prices moved. There was a low in July and a high into December. Low in July and a high in December. Same type of deal. Narrowing. Okay. So now after an extended period of time, your commercial hedgers are long and your traders are short. Okay. The market is susceptible to a reversal. Okay. Here you can see we had our sideways pattern. We made a series just recently of lower lows. Okay. Then we had kind of a move up here, right? So is this the start of something? The best part is that if you do decide to buy and you put your stop down at $4, I'd kind of give yourself a little extra room. That you may be onto something here. So I talked about May wheat because July wheat would be the new crop. Okay, so there's spreading. It's called old crop and new crop. Okay, you can spread, like say buy May and sell July. Okay, that kind of thing. That tells you your basis too. You've heard of terms like contango and backwardation. If the front month is higher than the back months, okay, that means that there's more demand. People are they demand it now. Okay, if the front month is lower than the back months, they don't want it now. They'll pay up down the road. Somebody has to store it. There's, you know, if you're like the utility, you have to buy the coal, you have to get the money from the bank. Those are called carry costs. Okay, so now all of a sudden you have there's a low post harvest. You get a little bounce up here. You get some seasonality for, like, say, Minneapolis wheat, things of that nature. You have a sideways, and it broke lower. Okay, now here is, I call these jabs. Okay, if you draw a line underneath here, it came down for the breakout. Okay, jabbed. Now it's beginning to reverse. All these guys that have been short for a while. Okay, these are the pro traders, the large traders. They've been short for a while, so they're susceptible into a violent move the other direction, and then they'd have to cover. And then, just like we saw natural gas, if they decide, hey, wow, we could be taken off here. Beans on November 2017 are trading at or above basically the previous high. Okay, so you have beans. In the old days, you'd have the three pits. If one's screaming, then it gets the other guys giddy, you know. And it's the mass hysteria with the crowds. Okay, so the wheat here, what I was looking for was a follow through below here, and it didn't do it on Friday. We got a swing up through the previous one. So short term, it would be higher. Okay. You can see it came down. This is similar to like that DDD pattern, that stock I talked about. You know, it popped down and then you get basically a sideways pattern. This could be the bottom. So this could be wave one, wave two, and this would be like an ABC type pattern, and you swing up. Okay. It came through. You had sellers in here. Okay. Now these funds, the pro guys, they know that the stops were up here, you know, for the new shorts. Then it came back mechanically. That was where the stops were at. They hit it and they came back in. So these guys have to beat on this thing. Okay, they have to beat on it. They have to get it back below 406, 407, which is 6 cents lower, which is $300, or they face, you know, there's a large volume move here, or they face that they have to get out of it. You know, they've been, you know, it's mechanical. Here's your trend line. It's horizontal. You broke through it. There was a retest back here. You had your short. You had new shorts. You stop. Shorts, stop. Shorts, stop. Shorts, stop. Shorts. You know, and here's your stop on here. And you can see the angle of descent is increasing, you know, sharply. Little falter actually came through. This is where they should have done some buying coming in here. Okay. All right. Because it's just mechanical. You know, you draw a horizontal line, or you draw a vertical line, you have a horizontal line. If you break through, then your stop would be up here. You break through again, right? Approximately. You break, just like I said, the bodies, you put it there, not here, right? So you could actually handle the pullback. You move your stops, you break on through again, you move your stop, you break on through again, you move your stop, you break on through again, you move your stop, break on through. And here's where you're out. Here's where you're out. So you didn't get the low, you got this basically the second best low, we'll say. Okay. So now you come back to it. So they broke through, we lots of volume, so we triggered a lot of stops here. So we basically had a lot of shorts that covered. Okay, so in theory they won't be covering in the future, but okay, now we have, say, like guys like me that say, hey, look, the pros have been short for a while, the commercials, you know, they're not long, this does look like a decent pattern, maybe this will jab and we'll break on through the other way. Okay, so now we're talking, what did we talk about, 425 or so? So now on a daily basis, we're playing the game the other way, where we'd add on to the winners, okay? Add on to the winners, add on to the winners, add on to the winners. Okay, so that's on your wheat. Going back to the Commitment of Traders report, okay, so this is for, right, Chicago down here. Okay, right? Yeah, wheat and Minneapolis, okay. Okay, so this is Chicago. Spring wheat, yeah, okay. All right, so what you can do is you can take a look. I don't have the charts up there for Minneapolis, Kansas City, but they're on there, and you can. They kind of go hand in hand, okay? But they're basically each their own. And kind of like what I'm looking for here is this data up to Tuesday, okay? Basically, you have the little guy, you know, covered some shorts, added some longs. Other reportables they got out of their longs, added. So you're getting, you know, here's where managed money, they're short and they actually covered some of it. All right, swap dealers, and then your producers in that. So the producers actually added to their longs, they added to their shorts. And then this one is basically your swap dealers. Same thing down here again too for the other contracts. Non-reportables down here. They have the shorts, okay. They added to their longs. Spreading action goes on, like I said, old crop, new crop, that kind of thing. They added to the longs and added to their shorts. Managed money got out of their longs and added to their shorts. Okay, swap dealers and the other contracts here, they added to their commercials, added to their longs, and got out of their shorts. And then Minneapolis wheats, basically the same thing, a little bit thinner trade. Little guys added to the shorts, bought some longs. Now they may be doing something where they're shorting May and then buying July. Okay, so it's not listed on there, but that would be your spreading. And those are some things that have happened where if you run into something old crop, new crop like soybeans, you buy July and sell November. We're running out of supply. Here's where I kind of go off on a tangent in regards to, say, wheat. All right. Back in that late 70s, there was a grain embargo against Russia. Okay, so right now we just have some things that we're embargoing Russia. They have to go basically black market. I call it they have to go through third-party intermediary. Okay. Back in the late 70s, we had a grain embargo. And when we did the grain embargo, what that does is that unsettles the citizens, okay? If you want to mess with the country, don't give them their daily bread. Humans want just a job and a full tummy, basically, all right? We're real easy. Humans are really easy to manipulate. Okay, so you have that. So what happens is if Russia wants it, and we also had the blow-off of commodities in 1982. So Russia felt susceptible to, they couldn't go directly into America and buy from us. They had to go through third-party Rotterdam and then in the Netherlands, and that's how they were able to score their stuff. Now, one other note on this is if you go back into 1929, when the Great Depression hit, Russia dumped everything for their wheat to get money. Okay, so Russia actually helped make matters worse when driving down commodity prices. They actually got it right, and they dumped wheat, and it would not, that's what happens when you're in a depression. Everybody sells everything for whatever they can get. And that's after depression. Like I said, in this business, you get a multi-decade low that's going to be good for a while. So, but getting back to wheat here. So if you take it on the long side, all right, I probably would put my stops a little bit further down here. Would I reverse on here? I probably wouldn't reverse because now I've been looking for a long side. I'm not going to force the issue, okay, because of the other thing is if this does reverse, some of the pro guys would probably start covering on their way down here. This is also the same the same for with corn is the same deal. Back to the point in the figure chart with the wheat, you can actually count the boxes sideways here. I took liberty and counted all of them, and it came to 13, and so it actually pops through here, and here's where you find some supply. So if wheat does clear, this says about 420, okay, and this is going to be spot, which is the front month. In theory, resistance line is about 450. Here's an area here about 448. You can also use this downtrend line too. So if you buy wheat, say like May, okay, that kind of thing, because you're holding on to the old crop. It gives you some time so you don't have to roll into something. I mean, if you buy in, you can hold on tight and then, 388, 387 and 3/4, that kind of deal. It wouldn't, it's been a precipitous downtrend, right? Okay, so when you get to the ends of things begin to get violent. But you can see at 404, this is the belly curve. This, I call these happy places. They loved it at 404. Okay, so if wheat doesn't come back, I'd say that 404 would probably be a pretty decent hard stop on it. 416, you can see it poked on through. If it comes through, probably about here's 444 to 450, and then we'll go from there. I don't expect wheat to shoot up 30 cents tonight. Getting back to the goofy tangent. Okay, so we had the grain embargo with Russia. Okay. I don't know this for sure, but we probably wouldn't. The president is privy to information. He gets the jobs report. And I think 3 people see the job reports from the Fed. Okay, when I was a youngster on the floor, I heard the old timers talk about that LBJ used to front run crop reports. Okay, and we all know Hillary Clinton. She's an astute commodity trader. She turned $1,000 in live cattle into 100,000, right? Okay, so we probably wouldn't guess that Obama was front-running reports. We'll say that. But the new guys that are coming in, I wouldn't put it past them. So what I'm getting at is that we have all these CEOs, okay, and what's good for the goose is good for the gander with supply-side trickle-down economics, right? But you have these games where, like in wheat, all of a sudden you gobble it all up, okay, and you take it off the market, you create a shortage, like a corner, okay. There are a lot of countries that produce wheat, things of that nature, but what I'm saying is that even though it's like, hey, Kevin, it's raining, but wheat's going up, why? It's one of those things that, silver prices took off and then you found out there was a corner in the market. If you go back, the hunts before silver actually got into soybeans. Okay. Sumitomo copper, they got into copper and they got burnt. Cocoa prices or cotton prices damn near killed Glencoe, Well, I guess it did, right? Didn't file bankruptcy and come back. Okay, now So what I'm saying is that if wheat takes off, I wouldn't put it past these guys to allow things like that to happen. If you start gutting agencies, you're not going to have any oversight. So we may have a situation here where there could be collusion on both sides. We just tell Russia that this is what we're going to do, and we're going to play it out in the papers that we're going to try to harm you to prove that I didn't. I'm not buddies with you. The Germans used to do this, unfortunately. Shoot one of yours to prove you're one of us. Okay, so maybe to get off the whole Russia deal, as Putin's my pal, we do an embargo again, or we press the issue. Well, Putin's privy to it. His people get in and buy. Our people are trying to corner the market. It causes havoc across the rest of the world. All of a sudden North Africa's in flames again. So I'm not a tinfoil guy. I don't do the chemtrails, but I'm just saying if I was part of the dark triad, that would be something I'd look into. So, but that's here nor there. So the deal is that you buy the wheat and you have the low. Here is the weekly of the Bloomberg wheat subindex. Okay, so it holds. There's a little, your triangle going on here, and it breaks, it holds. It jabbed below to go lower, and then we had a reversal. Okay, when I put it to daily, it makes things look a little more bullish. All right. So here, all of a sudden, you trade below it, you jabbed, and all of a sudden now you're above it again. In theory, you blast through the other side. Okay, so that has that going on here. So there's that, and then also I think it's called wheat is this one. Let me see how Can you make 5% off of it? Well, I suppose you can. So that's oversold on a daily basis. Weekly basis. So what are we talking here? $7 to $11, so that's 50%. That works in my book here. Okay, so the first target would probably be R1, which is 884. But like I say, it's one of these where you buy and close your eyes. You know, like the nice thing here is what's at 695, and it's 20 cents off the low, so you can. It's not as much risk. But remember, like I said, the trend has been persistently down. If this thing has to unwind, it'll be harder because you're going to probably get the pros to press the issue. But in the short run here, the market is susceptible for a swing the other way. Okay, and when you have trend changes, it gets violent. We saw that in, unfortunately, gold only got 1 day out of it at the 15, 18 buck rise or whatever. They gave you 1 day and that was it. So this may only last 1 day or 2 days or 3 days. But the deal is that because of the market structure, it is susceptible to, we'll say, a short covering rally. What's up in here? 17. So that's not too bad here. What's this here? 13. So that's not, I guess I'd play the odds, right? 7, 9, 11, 13, 15. That's how I'd play the odds. Any options? No. Okay, 2 hour chart. I need to change over to these guys. All right, so we have a look it up, search for 1, 2, 3 pattern. It's not Booker. I can't remember the guy's name offhand. This is also set up your bat or whatever pattern. So there is more swing into this thing here. This is the top of the cloud. You saw how it hit the top of the cloud here. Also the lines on here. I have, these are just channel lines of like 12 period, 24 period, and 48 period. They basically revert back to like 4-hour periods on Forex. Okay, this is 2 hour chart on just the wheat, but you can see that it was oversold here. So the swing would be up to here on short-term basis here. So, so there you have it on the wheat. Let me take a look at weekly here while I have it. Weekly, yeah, is the oversold thing here. See, big fat bottom bar, kind of like drip, unfortunately. You had a lot of selling going on. They just gave up here. And then we're poking through here. So for right now, until I see the open interest change, I have to treat this as a short covering rally. Okay. But it does look like it has a decent swing to it. You know, you buy into it and place your stop. You know, you're only 20 cents. You know, only 20 cents, Kev. What happens if they're moving 100,000 shares? Well, you know, it's percentage-wise. You know, what is that, 3% or so? So, you know, what did we have? We had an oversold here, and what did we get? 7 to 730. 750. What's that? 6%, 7%, 7%. So, you know. You know, if you can get, you know, like I said, 7% in a month, hey, you're doing twice as hot as the best fund manager, you know, that kind of thing. So that's on wheat. So once again, the deal is probably shoot into the if it clears, we'll say 24 area here. Clears 24 will probably give you another 20 cents or so. And then you'll probably find some people who are going to short this thing. More than likely, if that happens, the pullbacks will probably be purchased by the large players, because now they know that they've stayed in too long and they got to get out. All right. Okay, I think that's it, right? Or hold on a second, Kev. Where are your contracts here, buddy? Have to do this real quick. Today's 11th. And I'm looking for the wheats. Okay, we'll just start off with December. All right, so coming off the board. Okay, all right. This is December 17. Okay, so for some of you here, say if you buy May, all right. Here's the other deal here too, is that there's only 2,000 in here, but the other thing here is, you know, if we think this thing's going to extend, okay, you know, go on for a period here, you may want to look into December. Okay, just like as we go through, we'll go through July. You can see that, you know, the volume picked up on the way down. People were selling into it. This is a hard sell. That was actually the low. A fat bar, you know, there's only 2,000 contracts. And then you're getting a sharp reversal on here, okay? I also noted that it's a Philadelphia coincidence index lists states that are in recession and things of that nature in both Oklahoma and Kansas are having a tough time economically. So they would probably want natural gas to go up and crude oil to go up and grain prices to go up. And that would be to thank the people that supported the POTUS. Like I said, you know, whatever happens, happens. You know, it'll be enjoyable, you know, going forward. I'm cautious by nature, you know. That's just how I am. And you know, there's nothing like helping out your constituents by, you know, holding back on price. You know, Cargill, all those guys, they just kind of hold back on, you know, selling. And then they just kind of create an artificial shortage. Okay. I don't have any proof, but let's just say, right? Okay, so this would be new crop wheat here. Okay, you know, decent bar, closed at the high of the week. Basically, you're getting your kind of weekly reversal type deal. One of those things too. If you get in, just close your eyes. And, you know, place your stop and hold on tight. Because basically that's what it is mechanically, right? If you know, most of the time it would, you know, you'd short it here once it broke out and you place your stop here. Well, it failed to break out. So now we're going the other way. So you buy it and then you place your stop down here. The other thing is you just, like I said, also save some powder, okay? Because if this is like an ABC pattern, would have one, say like, the old crop report where we have one strong down day, that's when I would come in and buy the wheat. So just like I don't get so giddy. Okay, there's, you know, if this does decide to run on it, you'll have lots of time. The deal is not to get too giddy. You know, if it does do that, then it has a hard sell-off day. Okay, then all the pros would go, okay, I've had enough of that and cover. They get that opportunity. You know, like the stock market's screaming higher, and I'm thinking about buying puts for the next recession 2 or 3 years out. That's an opportunity. I'm not saying it's going to happen. It's just you have to take the opportunity when it comes. Yes, I'm going against the herd, but I'm also looking forward. Here's March. Okay, you know, you can see it. You know, you can kind of feel it too. There's a, you know, it's kind of lost its momentum. These are logged charts, so it's kind of losing its momentum here. And then is there one more to go after that one? May wheat. Okay, so here's May wheat. All right, so here's pivot right here for the month of December. So, you know, you maybe get a swing up to the top of the cloud. That's at the 450 level from 425. You know, they're 25 cents, 1,200. What's that? $1,250. You know. So, like I said, it's just, you know, if, like I said, be susceptible here to, you know, if there's one hard crop report day where all of a sudden it says, you know, it's Captain Obvious, oh, there's a glut of wheat, slide down, that's it. You know, that's the nail in the coffin thing. All right, so covered that, covered the contracts, covered the wheat, covered it all. Once again, this is our market profile for the belly curve type, or yeah. At the CME, just type in market profile or CME handbook, and that should do the trick for you too. All right, I'm gonna leave you here with the wheat, and then September, one more, because I had one more on there. Same thing. Look at that one there. Whoop. Not a lot of bodies went running into it, but pretty decent, right? Pretty decent. That would be the new crop stuff. Okay, so it's not in the ground. Oh, is it in the ground? I keep forgetting where I'm at. I'm from Minnesota for 30-something years, and I moved to Arizona for like the last 15. And it's like the needles don't fall off the tree. You know, it's kind of like in Minnesota, I'm like, oh man, it's going to be nasty cold this year ahead of time. You can just tell when you live in the same place, same county for 3 decades, you know, when it's a, you know, well, it's going to be a bumper crop this year. Oh, it's pretty dry. We're going to get a drought. You know, you can see outside of the 3.5, 4-year cycles. That's the nice thing about commodities. If you miss something in 4 years, it's going to coming back at you. Let me do this real quick here. Soybean or soybeans? Hey, what do you know? It's going to be soybeans. All right, soybeans. I can't see how far back we go. But like I said before, okay, quarterly. Okay, each dollar move is $5,000. So you get, you know, $4, that's 20 grand move on, you know, margin. You close, you know, buy November and hold on tighter. Buy July and close your eyes. You know, and this is quarterly, so there's 9 months. You know, you wait 4 years, you know, a year. You wait 4 years, a year and change. Here was this one, 96 should have been it, but we didn't, or no, 90, 88, right? Yeah, 80, 84, 88, then it would have been 92. But things had changed. We got a new president in here, right? and other stuff, stronger dollar began to pick up, that kind of thing. All right, then we did have the drought in 96. Okay, all right, so you had to move from $5 to $9. It's $4, it's 20 grand. Same thing again, you get the bottom down here, the starting of the secular bull market commodities. You get a couple of droughts in there, you get the top, and now we're, you know, like I said, for beans, they're in there now on, so it's like, I wouldn't mind buying wheat, then I'd probably buy corn, but I definitely want to be thinking about shorting beans up in here, you know, and then look for beans to come down. Remember South America on this, which takes us back to coffee, and that's a different one. I'll do that with softs later, but there you have it. This was wheat, and there you go.